Then we come to the part of the show where I talk about what individuals should be considering before they make their investment decisions over the next 5 to 10 business days. We usually have three topics in mind, and three topics are on the screen right now. I want individual investors to consider the economic data. We had some economic data recently, CPI out of the US. We had inflation numbers out of Canada, Canadian inflation dropping down to 2.9%, a fantastic number. It's the first time we've seen a number with a two in front of it in quite a long time. But we're also looking ahead for some economic data, and we'll talk a bit about that. Quarterly earnings. We have a big company, probably one of the biggest, definitely one of the biggest in the world today, reporting earnings after the bell tonight. Nvidia reports earnings, a big company that will have major effects on the stock market, and also Canadian bank stocks. Canadian bank earnings will be reported next week, the end of next week. So quarterly earnings, I think something to consider as an investor, and how investments can affect your investing goals. Whatever you choose as an investment, it can affect and should affect your investment goals and reaching those goals and obtaining those objectives. So we're going to talk a bit about that as well. So let's get on with the first one, economic data. As I mentioned, we've had some CPI or inflation data reported already out of Canada and the US. But in particular, coming up, we're going to get a second reading of GDP out of the US. So they came to us with their first GDP number. Now they get a revised number that could revise that number up or down a little bit. We're going to get Canadian GDP coming out as well. We're also going to get or receive PCE. It's a number that PCE stands for personal consumption and expenditures. This is something that the Federal Reserve really looks at closely to get a feel for what investors and consumers are spending, what they're consuming, what their expenditures. And that goes a long way to figure out what's happening with respect to inflation. We're going to get the PCE data next week as well. So a lot of economic data coming out in the next week or so. And I think individual investors need to focus on this because with that inflationary data or with that economic data, markets will move, interest rates will move. And as we know, if interest rates go up or down, it definitely affects the markets. We have our first chart here on U.S. personal consumption expenditures, PCE, on an annual change basis here. And you can see how the PCE number has dropped significantly over the past, let's call it, year and a bit. And that is crucial. That is very good. That's what the Fed wants to see. We also have a second chart here on US GDP. And again, you're going to see that fourth quarter looks like in and around 3.3%. Last quarter of last year, 4.9%, almost a 5% number. And you can see how GDP has definitely popped in the last, few months. And so again, showing us that the U.S. economy is quite strong. And we'll see if that GDP number is revised, in the next week or so. I always like to show the Canadian number because obviously I live in Canada and this is a show done out of Canada. But keep in mind, markets tend to move more with what happens out of the US than actually our own economic data here in Canada. So this, you can clearly see how our GDP growth rate, well, I guess it's a non-growth rate or a negative growth rate is happening. You can see how much it's tailed off in the last few months as well. So overall, economic data to me is something, the macro picture is something that I need individual investors to focus on because it's going to affect interest rates. And as we know, interest rates definitely affect the stock market. The second topic or idea that I want individual investors to consider before you make your investment decisions are quarterly earnings. And as I mentioned, we're going to get the biggest one tonight. And I say the biggest one, even though Nvidia is not the largest company in the world, although I will say Nvidia actually passed just in the last couple of weeks Amazon and Alphabet, formerly Google, to become the third largest company in the world today, approaching $2 trillion, only behind Microsoft and Apple, which are well above $2 trillion. Now, as you can see, we'll show a graph on Nvidia. You can see that Nvidia has fallen on a bit of hard times in the last day or so. You're seeing about maybe a 6% decline in the shares. So perhaps they've pulled back just below the market cap of Amazon and a Google. So, but nonetheless, you're looking at the largest chip maker in the world and what many can consider the most important name for artificial intelligence. We know Nvidia supplies the chips mainly for artificial intelligence, and at least for now, AMD and Intel and Marvell and some of the other names, they're just not anywhere close to what Nvidia is doing with respect to the AI world. And because of that, Nvidia, a name like Nvidia, their margins are just huge, 75% margin on their products. People are paying a lot of money for their chips, and these chips are being purchased regularly. So why is this name so important for the stock market? Because it is the most important name right now in artificial intelligence technology, and we know that that is the one area that has been driving this market higher. So if we get a disappointing number tonight, and the bar has been set pretty high, you could see possibly a sell-off in the overall S&P 500 and stock market. And some actually are saying you could see maybe a 5 to 10% sell-off. I don't know if we'll see that big of a sell-off if numbers are not good, but definitely it will affect the markets. We also have a couple of charts here on some bank stocks. And as I mentioned, Canadian banks will start to report earnings the end of next week. And again, important for individual investors to consider because living in Canada, many investors will own bank stocks, either one or two of them on an individual basis. They'll be owned through a mutual fund, an ETF. In some way, most Canadian investors own Canadian bank stocks. And I've always, or I shouldn't say always, but most of the time, we've spoken on this show about Scotiabank. And there's a chart on Scotia. Starting to see Scotiabank stock ride a little bit higher. Their dividend is in that 6.6, 6.7% range. So very enticing for individual investors. And the second bank stock I wanted to highlight was TD Bank. TD Bank, arguably second largest bank in Canada. Some would say at one point it was actually the largest, passing Royal Bank. But here you can see their stock has gone down recently. They're paying about just over a 5% dividend. So these banks, great to own for not only potential growth, but also the income that they produce. And because so many own these bank stocks, it's a very important, piece of information for individual investors to consider before they make their investment decisions. The third point I wanted to discuss today for investors is this idea of buying individual investments and understanding that it's definitely going to affect your goals and objectives. I talk to obviously a lot of people on a regular basis, and everyone wants the same thing. They want to grow their wealth with the least amount of risk as possible. We all want that. However, it's hard to get growth in a portfolio or grow your wealth when you want a low risk investment. Low risk investments, predominantly, in my opinion, are places to just park your money and earn a small rate of return. And so if you come to me or an investment advisor in general and say, I want to buy GICs or bonds, but I'm looking for 7, 8, 10% growth, well, those don't match. And if you were to buy a low risk interest paying investment, it's going to bring down the average growth in your portfolio. And so it will affect how quickly you reach your goals, your investment objectives for your investments. And we have a couple of charts here. One of them, for example, is the real return of a GIC. And we've had this chart up before. We've seen, unfortunately, and you can see here the gold line, and tough to read the writing there, but I can tell you the gold line represents the rate of return. Once you factor in inflation and taxes, you could see that the rate of return of a GIC most of the time is not even zero. It's actually less. You're actually losing money after you pay taxes and after inflation is subtracted. So if you were someone that wanted to grow your portfolio and wanted to own GICs, well, unfortunately, those two things in many instances just don't jive. And if you're going to own bonds or money market funds and things of that nature. We know those things today are paying close to 5%, but after you factor in a 3% inflation rate and taxes, probably not making a lot of money, and it's difficult to grow your portfolio, and it'll affect your investment objectives. Another chart I have here, I actually have a chart of two stocks in particular. First one is Bell Canada, BCE, a name again that Canadians own in many portfolios. But again, if you're looking for growth, is this a name you're going to want to own? Probably not. It pays a pretty good dividend today, 7.8% dividend, highest I've seen on BCE in a long time, but the stock is struggling. You definitely would have lost a lot more capital loss than a 7.8% dividend could cover. So meaning the losses are greater than 7.8%. So this is a name again. If you're owning it for growth, you're probably in the wrong place. Another name similar to BCE in a similar chart is Enbridge. Enbridge is a name, once again, that here's the chart. We've seen a little bit of a turn up and now back down again, also paying 7.8%. But this is a name that you're going to want to own for income. BCE, that you would own for income as well, although I will say a lot of individuals believe that BCE could cut that dividend, something we haven't seen from BCE in many, many years. Enbridge seems to be increasing their dividend on a regular basis. So to me, that dividend, keeping that dividend intact makes a lot of sense. So overall, you've got to look at what you want to accomplish. What are your goals and objectives for your money before you choose the appropriate investment? And for this segment, I'll end on a great chart. So someone who is looking for growth, you're going to want to own a name like Microsoft. And we have a chart of Microsoft here. Microsoft pays basically no dividends. I think it's like less than 1% dividend. But look at that chart. If you own Microsoft over the last few years, you would have made quite a bit of money. Your portfolio would have grown. That stock has grown. So understanding what you're buying, understanding what you want that money to do for you, and putting those two things together is very important to understand before you make your investment decisions. Because if you're looking for growth and you're investing in the wrong areas, either income generating or ideas that aren't growing, then it's going to affect the outcome of that portfolio and perhaps delay your investment objectives or getting to or reaching your goals and objectives. So keep in mind that going forward, you want to own the right things at the right times and obviously at the right price. And to me, that is always the best recipe for success.